All right, so this is going to be a review of a gold trade that I took on Friday, and it played out actually last night on Sunday, which was awesome while I was at an event. So, gold, like we've talked about before, the macro state is a bullish run. We explained what we've been doing on gold in a lot of the outlooks for at least the last 3 or so weeks. And what I ended up taking, this trade was a continuation of current order flow based on a 5 minute price gap, which is a type of inefficient pricing to me. And it was a part of the impulse phase, which was inside of this leg here, and it was actually up in this region because I missed out on a lot of opportunity here. I think I talked about it before in the outlook. I really missed out on the mitigation of this price gap here on the daily, which was also a part of a liquidity draw. It was just the perfect play to catch the swing here, but in order to capture some portion of this move, this was just a continuation of order flow. And so really understanding this, that seeing as this is a bullish run, we're in the secondary impulse after liquidity draw of this price gap here. We balanced everything as we moved higher. Everything, all the wicks are touching. This isn't really relevant to me. This was the major gap that got balanced here on the daily. You could see 100% fill. We ran up here, took this high. We performed a liquidity draw, but this failed as we immediately mitigated the inefficiency or price gap here that followed the liquidity draw this high, which was just fuel for price to give a small pullback, and then we ran higher. And then ultimately, we ended up in a really consolidated region here before we blasted, as we are blasting through the all-time high on gold. And so my analysis actually began understanding this is the framework for the macro perspective. I actually went down to the 4-hour time frame. And at the time, what I ended up seeing, I'm going to use the bar replay tool, was this current price action here. If it loads, not sure what's going on here. All right, there we go. So this is the price action that I actually ended up seeing, and understanding that, hey, we are in a full-on bullish trend. The price action's holding. We're in a consolidation period. That to me means that I can hunt entries if I'm, looking for bullish plays. If I'm looking for bearish plays, that's kind of suicide because we're in such deep premium, but we're also near an all-time high in a very strong impulse sense. There's a lot of bullish pressure propping up these lows, and as you can see, as we slightly pull back, we're met with a lot of sensitivity to push price higher. And just notice how the black candles, the momentum of these black candles here compared to the momentum of this one green candle. It took 1, 2, 3, 4, 5, 6, 7. That's a whole lot of effort to push price down, and then one candle to basically mitigate all of that, and then 2 candles that barely push through, 2 candles ran through that really easily, and so on and so forth. So that's just a little bit of logic. If you want to learn more about like effort and stuff like that, go definitely look at the RCV channel to learn about it. Fredo talks about it a ton. Specifically in the videos, you're going to want to look at the Wyckoff, the law of effort, and then there's a few webinars, but join RCV if you want to learn more about it. So yeah, anyway, that's a little plug there. The 4-hour time frame at the time, this is what I was seeing, and what caught my eye was the unwillingness of this wick here on this black candle to take this low. And so because of that, that immediately intuitively drew my attention, like, okay, there's unwillingness to go lower. I see that everything from here is essentially balanced. There's no really inefficient pricing. There's no unbalanced order flow here. So if there is a play here at the time, I'm going to look in this region to see what exactly is my entry criteria. And so I went down to the 5-minute time frame, as I often do, and marked out the structure. So a little bit more clarity, a lot more, candles to assess what's going on, but this isn't really an analysis anymore. This is more of I've identified the area, I've identified the structural integrity. I want to look for execution. I'm not looking for framing up like a macro structural analysis anymore. I've already done that. I found my area of interest, which is the unwillingness, and now I'm looking for execution. So on the 5-minute time frame, though, if you want, better resolution, this is what it looks like. This is that 4-hour low. This is the failed attempt to take out that 4-hour low. So this is unwillingness, and that unwillingness led to a push higher, unwillingness here, then we ran to break this high. And so now, because of that break, this is the price action that I was seeing. And so essentially what I'm doing is following the order flow, because this is the price action that I saw at the time. So I had already missed this move here, right? But looking at it in real time, this is what I was seeing. I'm like, okay, so why are this looks like it's bearish, but at the time, I see this unwillingness. So unwillingness usually to me means that we are potentially reversing trend. We're failing to draw lower given the effort that it's taking to move lower, and we're actually beginning to place higher. So if I want to get any executions, I need to look for the transitions from bearish price action to bullish price action. And on the 5-minute, this is exactly what we got. This high is the last high before, this low here. And because this high failed to take this low, I'd be looking for price to take out this high, in which it did. And then I see we take out the high. So what was the sponsored move essentially, or what was the inefficiency that was generated to take out this high? And it was this 5-minute price gap. This 5-minute price gap got tapped once, twice, and then upwards of nearly 3 times. And ultimately I decided, I was like, okay, this looks like a very valid move. I can't see any other opportunities here. I wouldn't really consider this a sponsored candle. It would be more so a price gap here to be mitigated. Then you can see the order flow balancing itself out. And then we have the last price gap before taking higher. So obviously everything up here is pretty much balanced. So price dipped back in to fill in the liquidity pool essentially of orders that caused this break. And so once we got the solidification of this break, once we got mitigation of this price gap, I was like, I don't want to do any more analysis. I don't want to try to overcomplicate this. So I'm just going to go ahead and pull the trigger. And so ultimately what I ended up doing was using this 5-minute price gap as my entry, but was a little more conservative because also I'm a working professional. So I didn't have, I wasn't doing way too much to overcomplicate this. I was like, all right, I'm comfortable with the price action in real time. I'm doing other work, so I'm going to go ahead and take this trade, and I'm going to use the 5-minute price gap, and I'm gonna market execute. And I actually market executed at about 325. No, actually 325, 325 on the dot. And I had my stop loss according to my stop loss rules to be conservative, because I didn't like the size of this candle here at the opening of this price gap. So instead of having at the wick and also due to CFD spread, I was like, you know what, I'm gonna go ahead and keep myself honest, be conservative. Been burned too many times, so I'm gonna have my stop loss at the low of the wick, just in this particular case, knowing that volatility is picking up. And so had my entry there, and obviously because I was looking for all-time high or the high macro perspective, that's my trade. So this was kind of a swing trade because I did hold it through the weekend. I was actually expecting it to happen today, but it happened last night, which is awesome. And so ultimately this ended up being a 10-to-1 trade setup. So like I said, I market executed at 4.325. And so let me actually frame this up. 325, and my actual target was 4.381, and this was actually at 4.319. So this was the real RR of my trade setup. It was a 9-to-1 trade, and ultimately this is what ended up happening. Tapped, gave a reaction. Okay, and then this right here, it kind of scared me because I was like, what is going on right here? Why did we do this? It shouldn't have scared me. I mean, essentially, remember, there's 2 points in which price can fill a price gap. 50%, in which it did multiple times, and then also 100% is still valid. And so if I really wanted to be precise or stick true to the analysis at the time, I would have set, in hindsight, my entry at 100% of the price gap. As you can see, it tapped 100% perfectly, and that stop loss would have been absolutely stupid, right? This would have been a 76-1, but in real time, it ended up being a 9-1, which is totally fine with me, right? It didn't, I mean, it's not that big a deal. Still made hella profit. I was going to use the same lot size anyway. And ultimately, just absorbed some of that. Stop, had a slight scare. I was like, all right, well, let's see what happens. And then the most conservative entry would have actually been, which I have marked up here, is following the mitigation of this price gap. We had the inefficiency generated here, in which this would have been a more conservative entry of this price gap, and then take your stop loss at this low there, and have the same target. That would have been an 8-1. So a similar trade setup, if I had the time and if I was on the charts, but I wasn't. So I took this trade accordingly, and this was the result. I'm gonna let the price action play out because, you know, I weathered through the storm, saw all this price action, had the emotions, had the feelings, and then about 8 o'clock or so last night, this is the result. So yeah, it was a great trade. It's not really the ideal scenario fitting my models, but understanding the order flow and sticking true to the bias was more important to me. And that allowed me to find this opportunity, even though it was super late and super high in the premium of the current price leg. It was still a part of the pro trend move. So the security of the move is supported by the macro bias, which was a bullish run. And so seeing this unwillingness on the 4-hour time frame, having higher resolution here on the 5-minute time frame, gave me the confidence to take this trade, even poor market execution, but take this trade off of a 5-minute price gap with the stop loss conservatively at the bottom of the wick. If I was unconservative, I think this may have tapped SL if I had spread accordingly, but because I was conservative, it may or may not have. I don't know. That, you know, spread on CFDs is interesting at times. But this was actually still a valid trade just looking at it here. But if the spread would have been there, it probably would have knocked me out. But because I had that security, because I had that conservative stop loss rule, I ended up staying in the trade, and I held the trade over the weekend and took a positive result.